Dylan and I chatted about Under Armour on the tech show last Friday, but it was mostly in a positive light because of their showing at CES and their rollouts of, Fitbit competitors and all that stuff. But unfortunately, you and I have to chat about Under Armour in a little bit more of a negative light because of recent events. So what happened yesterday?
Yeah, absolutely. So I think it's really funny because, like you mentioned last week, you and Dylan were talking about how the company, I'm sure, spent, countless hours and a ton of effort preparing this big launch for themselves at CES of the suite of products they're offering.
And it was a hit.
$400, you get the scale, the chest band, other wearables to like
a heart monitor that's actually by your heart and not on your wrist.
Yeah, exactly. A whole fitness suite essentially, and they generate quite a bit of buzz at the event. But then they start this new week on Monday with Morgan Stanley, their equity research analyst, putting out this very bearish report on the company, cutting it to a sell essentially, reducing the price target some 40%.
What is it? So that's like $40 or something, or $50? I mean?
Yeah, it was. Reducing it significantly to about $62. So I think below even where it's trading now, and.
I might be getting ahead of ourselves here. Did they talk about valuation at all? Because that stock has a high PE. Like but it always does.
There's no denying that. Right now, it's trading in terms of forward earnings. I think it's trading about 51 times.
Yeah, that's
definitely rich valuation.
That's
you have to keep in mind, the stock gained 19% in 2015.
Not bad. Yeah.
So and that's on top of gains that it has put up. It has logs, strong gains, double digits, I'm pretty sure, for most years since 2009. 7 straight years of gains at this point. And
so what does this report say? Because Morgan Stanley comes out, are they just being negative just to be negative? Like what's the deal?
Sure thing. So I think there's two main points in the report that I want to cover and get to, and I think in this case, sometimes these reports come out, they ding the stock, and it's not really something that fundamental to the business. It's more of a near-term like volatility. This is an instance where I actually do think it touches on very important issues for this company. So if you think about Under Armour and what they've mentioned as being some of their like pillars of growth. Women's apparel, men's apparel, their international business, e-commerce, things along those lines.
Shoes.
Women's apparel has been a big part for them. It's been growing very, very quickly, far outpacing their men's division. And, the company has invested a lot to develop that part of their business. Last year, or in 2014, 2015, I think they spent something like $15 million on the marketing campaign with some really famous athletes. The one that I really remember seeing, I think it was really cool, was with I think it was Misty Copeland, and she's has her narrating like over the video about how people were doubting her, and it's showing her, and also like Gisele Bündchen had her commercial with Under Armour as well. So a lot of buzz around that, and it was part of their efforts to build up their women's business. And now you have this report coming out basically saying, well, growth has gone from from double digits essentially to stalling for the last 6 months of 2015 to stalling to essentially flat for the women's business, which makes up about a third of their total business at the moment. And also the fact that the second issue to really ding them is how for their footwear, they've seen average selling prices fall since the beginning of 2013. So about the past 3 years, average selling prices for their running shoes have fallen 20% versus 4% for the broader industry. The way this, the two ways this really rolls in, like I said, women's apparel being really important, but also in terms of the company's overall brand image, it's always been, high performance at a premium, right? High quality at a premium. But with those average selling prices, there's concerns now among investors that all of a sudden, if there's this shift where the company must compete more on price, well, you're going to see, obviously, margins are going to start compressing. The average selling price is going to continue to fall. What impact that's going to have on their growth rate, which is really, a lot of analysts are expecting to grow 20 to 25% annually over the next 5 years. Is that sustainable?
Right.
And so, it really changes all of a sudden the trajectory that this company might take. So it's just an interesting look into this report, how it touches on two really important things for them.